Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Let's go! And this week, we have an investing meets brokerage episode because the question's always out there. Should I get my real estate license if I'm an investor? Will it help me to have my real estate license? Am I even going to work with clients? Do I want to? We are going to answer all of your questions this week because my guest is Jon Bombaci of Candor Realty. He runs a brokerage that is just focused on working with investors. He has more than 30 investor-friendly agents, and we go all through it. So this is the episode for you if you're thinking real estate license or not, but also, P.S., Jon has a long investing history. We talk about how he went from there to agent to brokerage. And I just want to remind you, before we get to the show, if you subscribe to this podcast, wherever you listen to podcasts, you will get it in your inbox Monday and Thursday mornings. Let's go. This is episode 119 of Zen and the Art of Real Estate Investing with my guest, Jon Bombaci. Jon is the founder of Candor Realty. That is powered by FourPoints. He has decades of real estate investment and insurance experience. He's been involved in tons of real estate transactions, on market, off market, for himself, for his agents. Jon, welcome to the show.
Thanks for having me. Looking forward to being here.
Yeah, this is a reset because we did try this last week and got bombarded by weird internet, but we're going to get it right this time.
Absolutely.
Yeah, appreciate you spending the time and coming back. So tell me the first time that you thought of real estate as something that would bring you basically income in the future.
Long after I already owned investment properties.
Yeah, see that I remember us talking about this, but that's a really important point because we were saying I think that there are a lot of people who are homeowners or they even own one or two rental properties and they don't consider themselves investors. What held you back from thinking that you were already a real estate investor?
I don't know. So I was doing the corporate thing. I was climbing the corporate ladder. I had a good job right out of school. I was focused on my W-2. I think it's all about intention. I didn't own real estate for income. I owned real estate because it made sense long term. But all my bills and everything were paid from my W-2. Any income that was brought to the property just sat in the operating account for the property. I never took it. I never touched it. I never looked at it. That was part of my retirement plan, but I wasn't an investor. I was living in one of the units and just let that do its thing while I focused on growing my career.
Oh, so your first purchase, was it a house hack or a single family?
My first two properties were house hacks. So I house hacked a 3-family at 22 years old, right out of school, really because I couldn't afford to buy anything else. I had a lot of debt. I couldn't buy a single family. I could buy a really crappy condo, but I could buy a nice 3-family in Connecticut because the incomes from the other two units essentially qualified me. And then when I left the 3-family, I moved into a 2-family. But again, I thought of them as subsidizing my mortgage. I didn't really think of me as an investor. And then I kind of paused and someone was like, oh, you own 5 units. That makes you an investor. And I was like, oh, okay.
Yeah, but isn't it funny, though, now working with so many investors and obviously having a brokerage that works with investors as well, to look back at yourself thinking that you didn't think that you were, when you're doing 2 house hacks, back to back.
I know. I'm a little bit jealous of the people that find us early and they had the intention of, I'm going to house hack 5 properties in 5 years. Because I was like, I didn't do dick for 5 years when I was doing my house hack because it wasn't intentional. I was thinking of it as a place to live. I wasn't thinking about it as an asset. I was thinking about it as a liability because I was living there. It just wasn't as big of a liability as a single family or a condo in my mind.
Yeah. On those first 2, being so young, what did you learn about landlording? Because I think that's a difficult for everyone. But at 22, I know because I was, doing collections on my dad's properties. It's not fun.
I learned I am not a good landlord. That's what I learned.
Same.
I learned I like to say yes. I like to have a relationship with my tenants. I like to give people the benefit of the doubt. It makes me a good leader, I think. It makes me a bad landlord. And so one of the things I did is when we grew, I put a property management company between me and the tenants and the residents, because that is not my strength. That is not something I'm good at. I think I'm good at it. I think I can make a good decision. And then hindsight always proves that I was wrong.
Yeah, that makes sense, though. You're a nice person, but a bad landlord. And people think, I mean, I don't think I'm a good landlord either, but I'm the other way. I just don't want to deal with the conversations. Like, I just don't want to, it's not my thing, and I'll get annoyed. So to give them the best service, you also need to know the expectations. And sometimes when you're a nice landlord in the beginning, they can take a lot from you being nice, right? And that usually becomes the problem. Oh, that was my dad, oh, they haven't paid in 6 months, but they're really nice. Can you get
but where
the
are
money?
they going to go, right?
Yeah, exactly. And that is, I mean, it is fair. You want to be conscious as a landlord, like if something happens in someone's life. But again, a lot of times that property is paying the bills. So we would always say to tenants who are behind, like, you don't understand, like, sure, we have other money, but this property is supposed to pay for itself. So now when we're taking from a different property here, now our accounting's all messed up. So where did you go from those two properties? And when, like, after you decided, wait, I think I am a real estate investor.
Yeah. So when I was 27, we were in a second house hack. I was living in Massachusetts. I was commuting 3 hours to Boston every day. And I lost my father to cancer after like a 4-year battle. And I was like, I can't do this for the next 30 years. I was in the finance world. I was into financial independence, Mr. Money Mustache, Early Retirement Stream, Bigger Pockets. I was binging all these podcasts on my commute. And I actually looked at my finances for the first time and said, hey, if I keep doing what I'm doing, I can retire in 10 years. And then I was like, but if I find a way to leverage through real estate, I could retire in 2 years.
Yeah.
And so I went that way. So we bought 24 units in northern New Hampshire over the course of 18 months. The day I closed on a 12 unit is the day I gave my 2 weeks notice. And when they asked me where I was going, what I was doing, and I explained to them where I was going, what I was doing, they decided that was going to be my last day. That's a very common thing, though, just to hear like, oh, well, you don't want to be with us anymore, so you can go right now instead of sticking around and getting more. Yeah, and I had the similar experience. I was always involved in real estate. When my dad passed away, I was 33, and I was still a lawyer. And I was like, okay, I'm done with that. Because I felt like I was kind of doing that to fulfill what he liked me being a lawyer, but I didn't like it anymore. My kids were little, and I was like, I just stopped and pivoted my mindset also. And also, like, you go through a tragedy like that, you lose someone like for me, as I talk to every day, but I also wanted to reset my own journey. Was part of this kind of you saying, hey, me and my family, we're going to reset our own journey, take what I learned from my dad, but I'm going to go in a different direction now. Yeah, no, and I mean, it kind of forced an early midlife crisis, but
yeah. Well, I mean, I just read this book on midlife because I actually am in there, but they've adjusted the crisis to chrysalis. So I mean, it's like you can make these moves, and it did change you for the better in terms of where you were going with your finances. Yeah,
I think so. Anyways, yeah, I mean, it was probably the smartest, dumbest thing I ever did, or the smartest, scariest thing I ever did, because it was terrifying. Giving up the known thing, something you fight so hard for, to jump into something with a lot of unknowns, but wouldn't change for the world at this point.
Yeah. When you made that decision, did you start your brokerage then? Because we're going to talk about that. You opened your own brokerage that became investor friendly. When did that play a role, or, having a license play a role in your investing game?
Yeah. So I got my license probably like 6 months before I left the corporate world. And again, it was kind of like a security thing where I was doing a couple of deals, and I figured, hey, if I can do 6 deals a year and I have this rental income, I'll be okay, right? I won't be, I won't be ahead, but I won't be behind. And then when I left the corporate world, I met other agents that were actually bad agents. They knew what they were talking about. They were very analytical. They connected well with clients, but they couldn't sell in the single family and the condo world because they didn't have empathy. That wasn't their strength.
Right.
And so I introduced them to some of the clients I was working with house hackers and first-time investors and those types of things. And they knocked it out of the frickin' park.
Yeah, because the emotional attachment to the house is away, and it just doesn't work for some people. Some people are you're talking about investor-friendly agents focused on the numbers, like here's the trajectory, and that you can find the subset that really works there.
And that's what happened is I took these people that were interested in being agents, but they weren't good at it in the residential market, gave them a different clientele, and they were awesome. And that's when we kind of figured out like this is kind of a thing. And so I, grew from a solo agent to a team of 3 to a team of 6. And then it just kind of grew. And now we're up to 35 agents. I started it in 2020, so it's only been a few years. We've got 35 investor-focused agents. We're structured in like pods where we have team leaders. The team leaders have 5 or 6 agents that work for them. And we span 3 states now, Massachusetts, New Hampshire, and Maine.
Yeah. Awesome. And so what would you say to the person who comes to you now and says, look, I'm an investor. I like buying my own property. Should I get my real estate license? Because I have this conversation with everybody all the time. I want to get your take on it.
I ask them why they want to get their license. And if they want to get their license to save fees, then I say that's probably not the best thing to do because
overall,
you're gonna miss one thing that's gonna cost you more than everything you made by not being in the business every day. But if you want to get your license to help other people invest, I'm all for it. But I think it kind of comes down to what they think they're going to accomplish from the license. A lot of times people say, well, I want to get the license so I know how real estate works. And I was like, talk to any new agent. When you get your license, you know nothing about real estate.
Yeah, I mean, talk to 99% of realtors. They don't know anything about investing. It's not mutually exclusive.
Your real estate license isn't going to teach you anything about real estate. It's a vocabulary test. But if you want to use that to help other people buy or sell properties, I'm all for it. If you want to use it just to save yourself some fees here and there, like I think the risk outweighs the potential reward.
Yeah, and I also don't think that those people who think that last way that you said, they don't adequately represent themselves. Like they're bad buyer's agents for themselves. It's like using yourself as a lawyer when you're accused of a crime. Like you suck. Don't do it.
To that point, I almost never represent myself. I never list my own properties. I very rarely represent myself as a buyer. Like I run a team with a lot of people, and I value having someone between me and the other party because it covers you on a lot of bases that people don't quite understand.
Yeah. And that also goes to what you said about creating a buffer for you as a landlord. I'm someone who creates a buffer in a lot of what I do. Now, I do list my own properties and work that. But that's my wheelhouse just because I'm a control freak. But I also understand, like if I have a listing and I have buyer leads, I'm not even talking to the buyers. That's what I have a team for. I don't want to kind of muddy the waters on that situation. And I think it's interesting because I think there's a lot of investors who say, oh, well, I'll get my license, for myself, but I don't want to like do transactions for people. And then they go to a meetup and there's 9 people who have crappy agents and they're sitting there like, oh, I have a license, but I'm not going to say anything. It's like, wait, you're all friends. You can go look at houses together as friends and then you can help them because you're better as an investor friendly agent than 99% of the agents because they don't understand, ROI or what the income and expenses are for multifamily. This is what you found over this whole time, right? Especially with training your agents to be that investor-friendly type.
Yeah, no, exactly. I mean, a lot of times, it's that simple where a lot of our clients, like we pick up after they're working with an agent that didn't help them the way they wanted. Yeah. And it's like, oh, you guys actually know what the heck I'm talking about. And it's like, yeah, almost all the agents on my team have lived in a house hack. Like we help 100 people house hack multifamily properties every year. Like we get it, but like, it's up to you in terms of finding the person you want to work with.
Yeah. And I think it's important to have an entire team like that and to have your history because, investors, they all know multiple agents. So it's like, you have to develop a substantial amount of trust for them to stick with you or else they just, getting sent properties by 15 people. How do you avoid that? And how would we counsel yourself as if you're an investor, you're looking for agents? Like, how do you find the right one?
Yeah, so I guess I'm a little weird from that standpoint. So the message that I preach, and we do it all in meetups, and I talk about a lot, is real estate's a team sport. The stronger your team, the easier real estate gets.
Totally agree.
When you're starting off, you need an agent. You don't have a choice, right? Because you don't know anything about real estate. You need someone to help coach you through it. Come to the meetups, grow your network, build your own team. Feel free to use my team along the way. Eventually, you're going to outgrow us. And that's fine. That means you did what you're supposed to do, and we did what we're supposed to do. Like we provide knowledge. We don't hold anything back. When you outgrow us, that's good. hopefully when you outgrow us, you still choose to work with us when opportunities present themselves.
Yeah.
I don't think you're always going to use me for every single transaction, because that's not fair. But like, use us until you don't need us anymore. And then I hope you choose to use us when opportunities arise.
Yeah, I think that's a very fair statement too, and I feel the same way. I run meetups just like you. We'll talk about your meetups as well, and a lot of people will come to the meetups with agents, and they'll say like, "Hey, can you come look at this property?" And I would go look at the property as a friend, and their dumb agent would be there, and I'd be there like whispering to them, "This deal sucks. Like, I don't know what this guy literally doesn't know anything.
Why are we
talking
here?
about? Yeah, like this is like 300,000 overpriced." And I think that is what in the long term gets you good reputation, and the people come back when they want to. I think you're right. I think real estate as a whole, especially on market, people feel like you own clients. It's like, have you guys heard of free will? I don't need buyer's agreements. I don't care. They can do what they want. It doesn't make any difference to me. Like, sure, if my best friend goes and uses someone else, I might feel offended for a second, but I probably did something to make him not want to use me in that situation. I'd rather look at myself. Is that how you feel as well?
Absolutely. Yeah. We don't sign buyer agreements. We don't do any of that. And I say to my agents, like, you need to provide value. You want them to want you, but also you can fire them if they're not listening to you.
Yeah.
And that's different than a lot of brokerages, I feel. And the other thing I tell them is you are not allowed to show somebody a house unless you know they ran the numbers on the house first, because otherwise you're not real estate investing. You're gambling, and you need them to prove to you that they know how to run the numbers. And you'll find out real quick when they send you a house and you're like, there's no freaking way this works. Right, and I always tell them to challenge and push back, because you don't want to be showing someone a house that they haven't analyzed.
Yeah, I agree. Then you just end up wasting everybody's time. But that's great advice. And for listeners, if you're a newer investor, we're talking about the agent side, but we're actually giving you advice about what to do and what not to do as an investor. Get your ducks in a row. When you have investors that are new come to you, what things do you want them to have in order besides what you just said? You want them to have run the numbers on the deal, but how prepped do you want them to invest before? And hopefully a lot of that comes from your meetups, I'm sure.
Yeah, I mean, we get a lot of people off Bigger Pockets. We get a lot of people from the meetups. I mean, really, you don't need to have any homework done when you show up, but you always get homework when I finish the buyer consultation. I almost always do the buyer consultations coming in. I enjoy it. My team thinks I'm crazy, but I like having that call. I like having that 15, 20-minute call. Yeah. And the first thing we always talk about is location.
I agree.
And most of the time I get an investor where it's like, hey, I want to buy a 6-unit that cash flows, and I'll buy it anywhere in Massachusetts.
Yeah.
If I just be cheeky and I throw out some of the worst cities I could think of, it's like, great, I got a 6-family in Springfield. You want to go see it?
Yeah.
And they're like, no. I was like, okay, so now let's go back and fix your statement.
Yeah. Do you want a D- that cash flows? Do you?
And when we start with, well, where do you work? Where do you live? Where do you know? There's no one size fit all. I can't say everybody should be buying in Worcester or everyone should be buying in a specific market. You have to nail down a market that works for you. And then I say it takes us 3 to 6 months to find you a place. If it's shorter than 3 months, we either got lucky or we screwed up. If it's longer than 6 months, we either got unlucky or you're being unrealistic with your expectations.
Yeah, that's great advice, because I try to tell people I need 3 towns. I don't want more than 3 towns. Don't give me a county. And if you don't know 3 towns, it means you haven't driven around enough, because you can, and they're like, oh, well, I'm not, even if they're not house hacking, I'm not going to live there. I'm like, but you're not going to go pick up rent, or do repairs on a property if you don't like the area.
Mm-hmm.
You're not going to go somewhere that you're scared to go to, or you're going to pay too much for property management, which may be unnecessary for you when you're learning.
Exactly.
So these are really good points. So tell us when you started the meetups in your journey and how much they've played a role, not just in your, adding people to the brokerage, but also just in the kind of collective, connective part of real estate investing.
Yeah, so I started the meetup probably early, like 2020. I think we started the first meetup. It got a little bit rocked by COVID. We moved everything online. And then
we went on Zoom.
When we came out of COVID, that's when we grew, right? So probably pre-COVID, I think we had the main meetup here in Lowell, which is where I'm sitting now. And I think we had a second meetup in either Waltham or Worcester. When we got out of COVID, we then grew exponentially. And now we're up to like 9 meetups.
Awesome. All around Massachusetts, or are you doing them in New Hampshire and Maine also?
Massachusetts, New Hampshire, and Maine. So they're spread out. We normally have, 1 or 2 going on every single week. And then we have a virtual meetup once a month as well, which kind of allows people to join. I make it mandatory for my agents to attend 1 meetup, because we want people to be there. We want people to be part of the culture. And then that also kind of helps them in terms of, one of the homework assignments I give to new agents or new clients is I say, you have to go to one of our meetups. That's how you'll either connect with the team or realize the team's not the right fit for you. But you have to go to one of our 9 meetups. And then after that, you'll be able to pick an agent to work with within the market that you want to focus on. And a lot of times that meetup gives people the confidence they need to realize oh crap, I do know more than I thought. Or I met someone at the meetup that has their 3rd property and I know more than them. But I talk to a lot of people that are well educated, they know real estate and feel like they know nothing. And getting them in a room with people that are doing it, they realize they know more than they thought they knew.
Yeah, and worst case scenario, they know more when they walk out of the meeting than they did when they walked in. So huge win. And I agree with that completely. I think meetups are I know a lot of people talk about them, but I think a lot of people are scared to go to them because maybe they live in a town where they don't know, their friends don't invest in real estate, their family's not supporting, and they're just scared to get in the door. But we can both tell you, go in the door. Real estate investors are so nice. If you show up at a real estate investor meetup, you're going to talk to people the whole night. You're going to learn stuff, and it will change the trajectory of your journey just by getting in that room. And you've seen it, right? I mean, you've seen it with people like Andrew Freed, who connected us and has been a guest on the show. You can grow exponentially once you get in the room, and then you just keep getting in bigger rooms. But you like those small rooms too, because you can help the other people who are still trying to learn. Exactly.
And I'd say go to any meetup. It doesn't have to be one of our meetups. I don't care where you go. Just get out there, go to a meetup. And after the meetup, you'll feel more confident about next steps.
Yeah. And if you learn a little and you make one connection, that's a huge win, because what are you doing in your house? You can download a ton of information, listen to Bigger Pockets, read blogs, read books, but until you connect that with people and how it actually works, you're not going to understand. I remember I had a friend who, I was a lawyer and my friend was going to be a lawyer later in life. And he said, I'm going to take the bar. He took the bar, he passed. And then afterwards, he asked me about going to traffic court. And he said, well, I was reading the rules and it goes like this. I'm like, yeah, that's not how it works when you show up. A judge doesn't care. It's the legal system doesn't work just how the book says. There's interpretations, and that's for real estate as well. You can go to get your license and then you go in the field and you're like, wow, these people, this is like the wild, wild west out here. Exactly.
Yeah. And a lot of times it's someone will say something I understand where you got that from. They talk about in Bigger Pockets, but that does not work in New England. You can't buy multifamily that's newer than 1980. Not going to happen. You might as well just I understand where you're getting from, but we're going to have to get you really comfortable buying older vintage because that's what we have.
Yeah, that's a good point. I always tell people, read the books, but don't attach them to location or price, because those things are the things that change. Your location is going to change. I always, I get in touch with a lot of people. I'll see them on either Bigger Pockets or they ask me a question. They're like, oh, well, I'm just going to buy this 2-family and turn it into a 3-family. I'm like, yeah, that doesn't work in New Jersey. First, there's a gigantic difference with the codes of what you have to do when you go to 3. They just don't understand. And I'm like, they're like, well, my agent said it's no problem. I'm like, okay, good luck.
I love it too, where it's listed in MLS, where there's a bonus unit in the attic that you can convert to a 4th unit. And I'm like, that can't be legal, but
right. And P.S., you just put it out there so the town can see it, so they can shut you down later. And then when you go to get the town card and you're asking the town questions, then you're going to get shut down. That actually does happen here a lot. The 2+1,
All the time.
Yeah, there are some towns who are okay with the 2+1, or you can do the 2+1 with a relative. There's definitely ways you can do the 2+1. I like if you're going to live in the +1, that you can get away with in almost every area. Here you would just not have a stove, but I think that's a great play. Most towns are fine with that, owner occupying the bonus unit.
And we do a lot of those. We call them ADUs, right?
Yeah.
And a 2+1 is great if you're paying a price of a 2-family and you can use it as a 3-family. It's not great if you're paying the price of a 3-family and you realize you can't use it as a 3-family. It all comes down to price.
Yeah, exactly. Right. Because your rent roll is going to be different. You can't get a full rent roll on the bonus unit. I see that a lot with mother-daughter homes. They're advertised, one way as, hey, you can rent out this unit. And then you look at it and you're like, well, that's not really a separate entrance. So,
and the special permit is going to go away when you transfer title.
Yeah. Right. But then, and this is the exact reason why we're saying, like, again, you don't have to use either of us in the areas, but we know more. I mean, if you talk to a regular real estate agent, they're just not going to be up on these things. It's a very small percentage that are really focused on investing. And I think over time, I don't know what you think, I think that does help us with traditional home buyers as well, because I'm trying to counsel even traditional home buyers. You're making a huge investment. You know, we don't want them to think like you thought. You're 5-6 units in and you're like not even thinking like an investor, you know, and I think that we're trying to change that now, and they can get a lot of that on podcasts. But has the mindset helped you with traditional buyers and sellers as well?
It has, right? But again, we tend to gravitate more towards the clients that other real estate agents don't like, right? Where they're numbers driven. Hey, my budget is $350, but I want to buy something for $250 or less. And the agent keeps showing them houses at $310 or $315 or $320.
Yeah.
And it's like, no. Like you have your criteria. Let's bake it your criteria. Don't cave for anybody where you're the only one that's going to protect you. So like we deal with a lot of that where, you know, they work with the pre-approval, not necessarily with the criteria. And so we end up scooping a lot of people off of those because the agents have just been pushing them too hard and they get tired of it.
Hey, it's Jonathan. This is a brief interlude from the episode so I can talk to you about the fact that my real estate team, the on-market version, we just changed brokerages. So now we're at Real, which is Real Broker, LLC, and it is a progressive brokerage. We're super excited to be there. And one thing about what we do is we are an on-market, investor-friendly real estate team. So you're probably here because you're interested in real estate investing or you're an experienced real estate investor. We work with hundreds of real estate investors because we are focused on understanding investor dynamics. 99% of real estate agents don't understand what investors are looking for. We do. It's my background, and I bring it to my team every single day. So if you are looking for investor assistance in the state of New Jersey, we have you covered. Parts of New York, good. A little bit of a part of Nevada, all good. Also, if you don't know an investor-friendly agent in your area and you need help, just reach out to us. We will connect you. We have investor-friendly friends who are agents all over the country. Let's get back to the show. Let me get your take on this, because this is something I don't think we've ever covered up until this episode. It's on lowball offers. So, you know, and this is from an agent side, but I think we can really help investors with this. I know my take on this, so I'm going to give you the example. Someone comes to you, they say, I want to make 10 offers every week, but they're all going to be substantially below asking price. But I just want to gun them out. 10 offers a week. I know they're not even close, but I don't care. Will you do that? We
will, if you play by our rules.
Okay. Give us the rules, though, because this is going to be interesting. And I'll tell you why I won't, but I think we may end up in the same spot.
So I will, right? If you've put in the time to go look at the property and you'll stand by that offer and it's been on the market more than 14 days.
Yeah.
And that's it. Like, I'm not gonna do your job and offend 100 people for the sake of offending 100 people.
Exactly.
But if you're going to put in the time and you're going to stand by that offer, and it's a reasonable offer based off of your criteria, and it's been on the market long enough that I can defend it, then let's go do it. But I can't put in 10 offers, you get one accepted, and then we go see the property and you say, well, I don't want this one.
Yeah.
I can't do that, right? Because the problem with sending out 100 offers and getting one accepted is you're probably still overpaying for that one without realizing it, because there's a reason why they accepted your offer, and it's not because they were offended by it.
Yeah. That's it. So I actually agree with everything that you said. I just say no originally. You're nicer than me. And then I say the same reasons. It's like, if you want to make a low ball, I just want to be able to rationalize it. Like, some properties are just wildly overpriced and they're sitting 6 months. So then I can put in the offer, like, this is why we looked at the comps if the comps don't match. But it's those people who are just like, like you're saying, I'm not even looking at the properties. I just want to bid 100,000 below on everything. That just makes us look stupid as the one who's the conduit to sending the offer over.
And it doesn't do anything for you, right? Like, I'm listing a 2-family tomorrow. I could list it at $299 or $399. I get to make that decision. You buying it for $299 might not be a deal because I decided to list it at $399. It doesn't buy you anything just by saying, oh, $100,000 less all the way down. because the people that are going to accept your offer are going to be houses you don't want to buy.
Yeah. Yeah. No, I think that's a great point. And I think, overall, that strategy existed in a time before the internet, where it's like, hey, I have cash. And most of the people who are trying this don't even have cash. It's like, why are these offers even attractive? Like, there's nothing you're going to send out 10 offers a week with an FHA loan. That's just like never going to work. So when somebody wants to house hack, are there any things that you need to make sure they understand based on especially your experience as house hacking your first two at a very young age?
So again, it's just being, they have to learn how to run the numbers. If you're looking in greater Boston, you're not going to cash flow. It's just, you're not. So you have to be comfortable with that, right? If you buy a 2-family, you're lucky if you're paying yourself the same amount of rent you would to live in the unit. If you buy a 3-family, maybe you can live for a little bit less than paying yourself. And if you buy a 4-family, there might be a world in which you break even while living in one of those units. And again, it's setting those expectations where, people are digesting national knowledge and they're regurgitating what they hear. And it's like, great, but if you want to be within 30 minutes of Boston, like it just doesn't work here. Setting those expectations of where the market is. And if they're not comfortable with it, we can push them into different markets. But like you kind of have to reset people's expectations if they haven't run the numbers in greater Boston yet.
Yeah. And again, that's very market specific. It's exact same for us. We have very high taxes in New Jersey, close to New York City. You're not going to cash flow. I always tell them, run your numbers for while you're in there. Don't worry about them. Run them for when you leave. And then you'll see what it really looks like. Because if you want to hold it, you might as well see what it's going to look like if you're trying to hack for a year and then check out. And then you'll really have an idea. If you're leaving and then you're losing after your unit's open, then maybe it's something you need to talk about depending on the appreciation.
Yeah, that's funny that you say that because I normally have the same conversation a different way.
Yeah. I think we're doing like mirror images with the same answer in the middle.
Yeah, like, okay, you're buying a house hack. What's the plan? Are you going to sell in a year or are you going to turn to investment property? They're like, oh, I'm going to keep it for 30 years. So I'm like, okay, great. Run it based off of what it's going to be for the next 29 years.
I like it. Yeah. Skip the first year. Yeah, maybe together we would make like a full advice person here. Two strategies, same result though. I think I like it. And I think that's what's important about using your own experience and bringing it to the table. We don't want to be robots who are just regurgitating stuff that we've read in books. It has to be based on our experience. So after those first house hacks, how many investment properties have you owned up until this time?
Oh, geez. So last time I updated my personal financial statement, we're at 570 units.
Wow. Yeah. So what are you buying? I mean, what's the asset type that you like the most?
So I like what I know. I like small multifamily. I like stuff between 2 and 12 units. The majority of our stuff kind of falls in there. We like to buy big portfolios because we like to do this in scale. So I like to buy, the project you're talking about with Andrew Freed. We were involved in that. We helped bring it to the table. It was 12 multifamily buildings that made up 69 units. They're all relatively small, but I like that because we can carve off the little ones, we can value add the big ones, and we can massage the book to a place that it needs to be. We own a couple of 40-unit buildings. We owned a building as big as 132 units. We ended up selling that one last year. But I like that 2 to 20 range, and I like to buy them in bulk because that's where we have our advantage. If I can then weed through someone's properties as they're retiring, I can pick and choose my places and I end up kind of better off than if I was treating the whole book the same way.
Yeah, I completely agree. I love the portfolio option. Like you said, you gave a great snippet in there of what you can do because you look at them as a whole and then you're like, well, these two, I can make more if I flip them. These two are in good shape. The rents are good. Like, let's just hold those. And then like these two dumps, I'm just going to jettison, because there's no portfolio that has all great properties. So sometimes you just have to take an L on a couple of them just to get them off the books. Like you said, take those losses, move on to the other ones. I really like that. And I think there are a lot of old timers with portfolios out there that they don't really know what to do, and they may bump into you somehow. And I think that's the thing. When you work with investors enough, you find out that these very unassuming people own 37 units.
And a lot of times it's like they have a property on the market and it's priced wrong. And you start a conversation, you find out the guy's got 15 other buildings in the area. And he wants to sell this one first because it's in the best shape or something. And you can convince them to say, hey, I can give you a price on that building. No one else can give you a price on that building. But it's gotta come with everything else. Yeah. And a lot of times these guys, they want that number. They want to ride off in the sunset feeling like they they did good. If you can give them their price in a way that they feel comfortable with, they can go to family outings and tell everybody about how much they just sold this property for that they bought for $6 back in the day.
Yeah.
Like they want that story. And so you got to kind of find a way to give them that story while also getting stuff that allows you to pay that price.
Yeah, and if they own 15 and they're tired with one, they're not just tired with one. So giving that option, like, well, let me know about your whole portfolio. You want to get rid of it all? And like, oh, that does sound good. Oh, it'd have to be at the right price. But that's always going to be at a discount because it's going to sound like a lot, but we're taking all these properties off your hands. So there's an inherent discount built in on each property where you're already ahead. So even when you have to kind of dump the ones that aren't that good, you're still going to be in a win later on the bigger ones.
Yeah. And if you can buy them all based off cash flow and then trade the smaller ones based off of comps, you work out very well when it comes time to resell those buildings. Yeah.
Geographically, have you invested far? Or are you investing in the same 3 states that you're licensed in?
Pretty much the same 3 states that we're licensed in. So, we've had temptations. We've had people send us stuff out of market. But I'm very much of, 90 minutes from, we made a few exceptions for a few projects, but I like to be close. And I mean, the argument is I closed 4 properties last month. I've got 4 more closing this month. There's plenty of opportunities here in a market that we know and we're doing well. So why go somewhere else?
Well, yeah. And you have the competitive advantage. You know the people, you know the landscape, you know the towns, you know what to do, you know the rules. I mean, it just makes sense. I do think a lot of people, they're looking out there and it looks exciting and flashy to go buy a 70 unit in Texas, but that's not your wheelhouse.
And my question is, so I see it all the time in my market. I'm sure you do too. Well, you see a big property trade down the street and it trades at a price and you're like, what?
Yeah.
That makes no freaking sense. And then you find out it's an out-of-state firm that bought it and you're like, oh, okay, that makes sense. They didn't know what the heck they were buying.
Yeah.
And I have this rule, there's always a patsy at the poker table. If you don't know who the patsy is,
you are. Great point. It's true, though. I mean, and that's the same principle when a brand new investor comes to you and they say, I found the best deal. It's been on the market 200 days and they haven't reduced the price at all, but I know it's a winner. And I have to explain. You realize that every single investor within 30 miles has looked at this and thinks it's shit. But you, as a brand new investor, think that it's good? No, you're the patsy. It's a great point. Have you seen that too? Like, I can't believe this property is still available. You're like, look at the listing history. Like, it's been listed 7 times and withdrawn, and it's as is every time. And there's a septic issue. Like, there's always a problem.
Mm-hmm. Yeah, no, absolutely. And I mean, sometimes we're able to kind of take those old listings and turn them into something.
Yeah.
But what's on MLS, it's been sitting on for a long time. The deal that's being advertised doesn't make sense.
Yeah.
If you can treat it a different way, get it at a discount, get them to finance the new septic because they're finally tired and they want to be done with it, you can make it a winner. But like, there's a reason why it's been sitting there as long as it has been.
Yeah. In terms of marketing or where you find your deals, are you doing direct marketing to sellers as well as on market?
I spend almost nothing on marketing, which I think always kind of like shocks people. But we do the meetups. Like, so we do it through networking. I buy a lot of stuff off MLS. I buy a lot of stuff off wholesalers. I buy a lot of stuff off of my network. And I sell a lot of my stuff back to my network.
Yeah.
I mean, I spend very little on direct mail unless I have a very specific reason to do it. And I spend very little on, I don't do Zillow leads. I don't do realtor leads. I don't do any of those, right? Everything is kind of done through the network.
Yeah, I think that makes sense. And I think long term, you'll hear that from most people. I'm fine with the people. If you're a wholesaler, you need to be marketing, but your best deals are always going to come from the relationships that you've built at meetups and networking outside, because that's where you get the deal person to person. The wholesale deals, I don't know if everybody knows this, but the wholesale deals that come out on emails, that's like third servings. They've already sent it to their favorite people. People were passing. So then it comes out an email. Everybody thinks it's new. It's like, that's not new. It's gone through the VIP list already. You just have to get on the VIP list.
You have to get on the VIP list. A lot of times they're not the first time they've been wholesaled. A lot of times exactly. It's like, oh, I remember this property. I walked in a year ago. Yeah.
Yeah. And nothing's happened, hasn't changed, hasn't sold. That's interesting.
Yeah. The ones I do like, though, is when something goes through a wholesaler, someone overpays for it, then gets stuck. Sometimes we can swoop in as a rescue deal.
Oh, yeah. And like where they just did the framing and quit.
They just did the framing, and now you can essentially buy it for what they bought it for a year ago.
Yeah.
And now the property values have gone up. we have more relationship with the city. Most of the time we found out they got slapped by the building department for not pulling a permit.
Right.
Like we
nice
can go
red card sitting on the front.
Yeah, we can go into town hall and we can fix that by being the new owner and essentially, do a rescue deal off of an old deal. But
yeah, that's in the town's best interest. Yeah, but that's in the town's best interest as well to be the rescuer. So they're going to be on board for you, getting those permits cleared up. Because right now it's just a stain sitting there with boards on the windows. Nobody wants that in their neighborhood.
Correct. Yeah, and a lot of times, like it's in our market, so we either know the town already, or we get to know the town pretty quickly, and we can say, hey, we haven't done anything here, but we've done quite a bit next door. If you want, you can talk to blah blah blah, and that normally gives them reassurance that we're not going to screw them.
Yeah, I think that's important. I mean, I think having a history in anything helps you in all things you do. Like you said, in the beginning, maybe you what was it like at your first meetup, though? That's actually interesting to me, because I remember we started the meetups right at the pandemic. So we started them in Zoom and they got really big. And then when we went to in person, it was like, whoa, it started small. How did you know it was going to grow when you're there and it's like 3 of you?
I mean, it happens, right? And I think people make that mistake with meetups. I get people always asking me, hey, how do you start the meetup? How do you do it? And then we always give them the answer. We always provide slides. They always start their own meetup, and then they have poor attendance. After the 3rd month. The first month is great because all their friends and family come to show support. But the 3rd month it lags down to 3 people, and then normally they give up. And the trick with a meetup is hosting the meetup every month, whether you want to or not, whether people show up.
I agree.
And you have to make the meetup the most important thing you do that month. Otherwise, it's not going to be the most important thing for the people attending the meetup. And after 6 or 8 months, that's when we establish, will this meetup and its location stick or not? But you have to give it 6 to 8 months for it to grow, for it to build. Sometimes we start a meetup in a weird location. It doesn't work because the parking sucks or the food's not great or something about the room isn't conducive to the meetup. We have to change meetups. But you have to put in that 6 to 8 month window and see if it grows up to 15, 20 people. That's a good meetup in the first 6 to 8 months if you have a consistent 15 to 20 people. And then from there on out, it'll grow. You'll get one meetup where 50 people show up. And that's when you know that meetup is going to make it.
Yeah, those are great points. And I think it's helpful for people to know you can just start your own meetup. You just have to stay consistent. It's just like off-market mailing. You can't send out one mailer to a seller and be like, oh, shit, this doesn't work. I sent out one letter and the seller didn't respond. I give up. Like it's 6 to 8 months for everything. You got to make sure that people know that they can rely on you being there, because there's a bunch of crappy real estate meetups out there. So maybe they went to one and it's all hard money lenders and they're like, wow, this sucks. But I think people forget, okay, so maybe 3 or 4 people are there, but what if those become your friends? Like, huge win. Huge win. Low numbers, huge win. You'll have a better connection with those people there. Maybe one of them doesn't know anything, so maybe you can help them. And I think the people who want to help, again, that's a long-term brand building that we were talking about before, they'll show up and eventually they'll figure out what they want to do, or they'll get help. And, like you said in the beginning, I think was a really good point. You don't have to be involved on every deal. People have free will. Maybe they just want to go off and buy something from a wholesale. They'll probably regret it. But, if they go direct, but it depends how much they know. Like you said, at some point, they're going to grow to a level of knowledge where they're going to know a lot, and maybe they are going to get comfortable with that.
Yeah. And that's a great point. I mean, a lot of, Andrew Freed was, he came to the meetup as an attendee, then became an agent, then became a team lead, then ran his own meetup. A lot of our groups have now started doing masterminds themselves, or syndications themselves, and JVs themselves. And like, that's huge. And normally it's like, hey, if you've got the money and no time, there's someone in this room that's got the time and no money. Yeah. It's up to you to find those people. I don't need to be involved in that, but like, this is a network that you can pull from. And the more people that pull from the network, the stronger the network gets, assuming it feeds back in over time.
Yeah, I completely agree. All right, John, where do people find info on the meetups first? Because those, if you're crushing 9 of them, that's a great option for people out there in Massachusetts, New Hampshire, and Maine.
Yeah, so we have a Facebook page. The name of the meetup is Simplified Real Estate Meetup. It's the same name that we use for our management company and our development company. You could also, email us and we'll add you to the distribution list. We normally send out an invite every single month. And then the Facebook page is where we announce guest speakers as they come out and keep everyone up to date on what's going on.
Yeah, awesome. And how about if they want to get in touch with you, or they want to work with you guys at Candor Realty?
Yeah, so I mean, you can go to our main website, candorrealty.com, or you could reach out to me on Facebook or Instagram, or I'll give you my email as well. I'm now full on Facebook, so I can't take any more friends.
Yeah.
But Instagram, I'm trying to grow that as an option for people to stay engaged.
Yeah, and we'll tag you on the day that this comes out on Instagram. And so hit them with your email if you want, and then they'll be able to get in touch with you.
Awesome. Yeah, it's just my last name, Bombaci, Bombaci, RE as in the first two letters of real estate @gmail.com. That's my personal email. You're going to get me when you send it. I try to clear all emails within 24 hours. But obviously, be patient if you're asking me a very long question.
Yeah, and good details help. I've always said this. I've talked about it with a lot of people. If you want to get an answer from a real estate investor and you want advice, make sure you set the table well for them so they can read through it and then give you a concise answer. Just asking how do I house hack? That you can find that on Bigger Pockets. It's too open-ended. It means you just need to do a little bit more research. Do you agree with that?
Absolutely.
I'm trying to help your email.
No, I appreciate that. But come with a pointed question, come with something that you're looking for. But like I said, I'm big on setting up 15, 20-minute consultation calls. A lot of times at the end of the call, I say, hey, you're calling me from Texas. Like, you should not be investing in New England. Reach out to agents in your area and do these things. And if you need a lifeline, here's a quarter. Here's my cell phone number. Text me if you run into trouble.
Yeah.
But I can't help you in Texas unless, of course, you feel like you're stuck and you just need a sounding board.
Yeah. Awesome. Well, I'm glad we got this done. We had good internet connection today. I really appreciate your time, man. I'm glad Andrew connected us.
Yeah, no. Thank you for having me. I'm glad this one worked out better. I dialed in from one of our offices closer to civilization. So
Yeah.
it worked out well.
Yeah. Awesome, man. All right. That was Jon Bombaci of Candor Realty. I'm Jonathan Green. We'll see you next week. I hope you enjoyed that episode of Zen and the Art of Real Estate Investing with me, Jonathan Green. And I just want to remind you, and this is always an uncomfortable part, I don't want you to think that I'm begging for you to subscribe, follow, do whatever you have to do for the podcast, leave a 5-star review. But if you like the podcast and you think it adds value in the real estate investing sphere, then just do me a personal favor. Like the podcast, follow it, share it when you can with your friends, and be so kind as to write a 5-star review if you believe it deserves a 5-star review up against what else is out there. I would really appreciate it, and I hope you keep listening.